BlackRock has launched a climate action fund with the Singapore Exchange. Worth $426 million, the fund is the largest equity ETF launched in the country to date.
3, 2, 1, please strike.
It's built to track the MSCI Asia Climate Action Index that provides exposure to the top 50% of companies in each sector based on green factors. The fund is anchored by one of the region's largest asset owners, Prudential, with investors including Temasek and Singlife. It will give investors access to companies committed to reducing carbon emissions. Well, CNA's Elizabeth Neo spoke exclusively with BlackRock's Southeast Asia head, Deborah Ho, and the Singapore Exchange's senior managing director, Michael Syn, to find out why Singapore has been chosen for the launch and how it fits into broader climate financing efforts.
It really speaks to the kind of demand for transition investing products, and truly the momentum, particularly in this asset class, has grown. In fact, the work that has been done by BlackRock, by others in the whole ecosystem, has really made Singapore almost like a convening point to be able to corral the best brains, the best capital, or to be able to come together for this really important goal of reducing carbon emissions.
Singapore has played an outsized role. Typically in such matters, it's large countries who are either the victims of climate change or perhaps are tasked with making significant changes to deal with climate change that ought to be leading these measures. But Singapore's been unusual in the respect that one thing that we are good at, even though we're a small country, is forming consensus and bringing people along with us, even though our economic impact is not that large. So I think it's a reflection of what the government and the ecosystem at large has decided to do in reaching net zero ambitions for the country as a whole, that the financial sector has to do its part.
How does this ETF fit into, the broader picture of climate financing? What are some of the funding gaps that you hope this can fulfill?
ETF ranges that we have in climate action really fits quite nicely into the entire platform because it allows investors access into some of the best-in-class companies that are committed to reducing carbon emissions. It provides scale, it provides transparency, as well as the ability to access transition investing in a transparent, convenient and a low-cost way.
The climate crisis is the result of a very massive market failure that began at the start of the Industrial Revolution, 1850, because global economies managed to grow without thinking about the environmental damage that they did. But what we need to do now is to cure this market failure by making sure that green and brown are properly priced in. So if you're a green company with a very well-practiced and seasoned and outperforming decarbonization path, you get the green upvote, right? You get more capital allocated to you. If you're not that company, you're a brown company, you're a laggard, you'll get the brown downvote. So the important thing about this ETF is to corral all these votes, to bring in capital, to give the green votes and the brown votes, and in the long run, the market will work as a weighing machine to give privilege to those companies which are doing well, attracting more capital, and to punish those companies which are not.
When we talk about, climate action ETFs, there's also concern of greenwashing. How do you ensure, what would you say to that?
Transparency, accurate reporting, and really access to data is going to be critical. Because at the end of the day, when we talk about financial markets and investing, underpinning all this jargon really is trust, right? And so I think that regulators around the world, coming together, to make sure that there is clarity and transparency is absolutely critical.
One area where you have to be very careful is future promises of behavior. So that's where greenwashing can come through. Now, the global regulators, including ourselves, are making very, very sure that companies which disclose both historic measures and future measures are subject to the same sorts of constraints and assurances that you have in financial statements. So it's not to say that financial fraud never happens, but it happens rarely, and it's punished when it does. The same will happen for climate disclosures.
But Deborah, I have a question for you actually. How will you explain the dissonance with recent reports on BlackRock's pullback in support for shareholder proposals on ESG issues?
BlackRock is absolutely committed to, in fact, we've always been committed into the transition to net zero. So we vote in shareholder and management proposals in incidences, where the clients have empowered us, to do so on their behalf. And so in the management and director proposals that we vote in during shareholder meetings, there are times, that, we may not agree. Okay, and that usually has to do with director independence, board composition, or really, commitment, overcommitment on the part of directors. So we firmly believe that sound corporate governance and a credible long-term strategy towards a low-carbon business model, is really the way to go for companies to win in the long term.
If I could get you to elaborate a little bit more on this ETF, who are the constituents, where are they based?
It looks at everyone who's already invested in the mother index. So in this case, Asia ex Japan is the mother index. This is existing investments, existing capital. What it does is it asks investors, if you're already invested there and you're not climate aware at all, would you like to switch your investment to the climate action version of this index? It pretty much gives you the same exposure to sectors, but what it does is it significantly upvotes companies which perform well on a number of fronts: historic decarbonization, plans which are going ahead, novelty and innovation in green revenues, as well as commitment to science-based targets. And it gives major green upvotes to these guys. So capital slowly gets bled away from the more brown companies and allocated to the green companies. This is really important to understand, because you cannot suddenly defund large parts of the economy without dealing with the potential impact.
So it's not about withdrawing funding completely from brown industries, because the truth is that we have to basically help these brown industries to transition.
Yeah.
At the same time, invest in new technologies that will help in terms of this acceleration.
Who do you think will be interested in this ETF?
So really, I think that this, in a way, democratizes the access to transition investing. You could be an individual, you could be, basically a big portfolio manager, of a sovereign wealth fund, or a treasury. I think that this is a way that you can get easy access to a diversified portfolio of companies, with a clear path, to low carbon emissions.
And for more stories on BlackRock, do check out our YouTube channel and our website, cna.asia.